Is it the case for all expats that they have to go through this process of the exit tax and all of that when you're renouncing your citizenship, or are there some exceptions?
So what is an exit tax, and what is this exit tax thing all about? An exit tax is a tax for leaving the system that's on the deemed or pretend sale of everything that you own. So that would be, your personal home. It would be any investments that you have, business that you have, personal belongings as well, car, boat, everything that you own. For your retirement plans, it's generally considered that you took a full distribution of all those retirement plans the day before you renounce. So that could wind up to be, quite a large tax bill. So because there's so much that goes into this, specifically the financial aspects, we need to always talk with a tax professional and plan this out. Because what could happen is you might wind up paying a huge exit tax that you didn't expect. So whether or not you have to go through the process of determining if you owe the tax and paying any tax that you may owe depends on whether or not you're considered a covered expatriate, which is a defined term. A covered expatriate is someone who meets one of any three requirements. Just one, you don't have to meet them all. So the first requirement is that you have to be tax compliant for the most recent 5 years. The second requirement is based on the average amount of federal income tax you've paid over the last 5 years. So that amount goes up a little bit every year. Some rough numbers here. If you've paid on average $200,000 or more each year over the last 5 years, you're considered a covered expatriate. The last test to determine if you're a covered expatriate is called a net worth test. If you're worth $2 million or more, then you are a covered expatriate. So if you meet any one of those three tests, you're considered a covered expatriate. You have to go through that process. If you're not a covered expatriate, then you have to file a final tax return, Form 1040, to report all your income from the beginning of the year all the way through the day before you renounce. And you have to, potentially pay tax on that amount. And generally, that's it, with the addition of filing Form 8854. So that's the form that reports some information about your expatriation. It's where you have to certify that you have filed correctly over the last 5 years, that your net worth is below 2 million, and etc. So for a lot of people who expatriate, and then generally as long as they've cut all ties to the United States, the financial ties, then they're completely out of the US tax system.